Hey YouTubers, it's Thursday the 17th of May 2012. We've got silver coming in at £17.34p, pencil pennies, 27 US bucks and 46 cents. Gold coming in at £977 and 97p, pencil pennies, or 1,548 US bucks and 40 cents. Linkies for you today. Now there was a bit of a ruckus in the ranks where a report came out saying the IMF was buying gold, and as we can see in this, this is an updated and corrected version. The IMF has not stated that it plans to buy 2.3 billion of gold as reserves. Instead, the IMF has only stated that it plans to increase its reserves. Either way, it's looking like it's buying more gold. JPMorgan's Dimon wins pay backing. This is where the shareholders of JPMorgan all banged their heads together and went, "Yeah, well, it's only a $2 billion loss. Everything's going to be okay." I did a bit of research, and these little linkies here: the last days of Bear Stearns, the last day of the Lehman brothers, and basically the last day of MF Global. If you ever read through those, you can make up your own mind as to what you think is going to happen with JPMorgan. But of course, the reports of the massive silver short sell-off, whether or not that was to release liquidity, I don't know. But the simple reason that they are getting out of that market in the at the levels that they are doing it, does raise some alarm bells for me. Then we have bank governor warns of eurozone crisis storm. We'll just have a listen to this for a minute.
Been through a big global financial crisis, the biggest downturn in world output since the 1930s, the biggest banking crisis in this country's history, the biggest fiscal deficit in our peacetime history, and our biggest trading partner, the euro area, is tearing itself apart without any obvious solution. The idea that we could reasonably hope to sail serenely through this with growth close to the long-run average and inflation at 2% strikes me as wholly unrealistic. We're bound to be buffeted by this and affected by it. What we can do, and this is the great virtue of monetary policy, is to, when we see these winds coming along and buffeting us, we can change tack or course, but continuously with an eye to get back to those calmer waters of steady growth with low inflation. And that's what we can do. We have the ability to change policy fairly quickly. And that's the task of monetary policy.
So it's amazing now that they're coming out and sort of, yes, there is a problem. Genie arse. Next, a lot of you have seen this. Italian banks have their credit ratings cut by Moody's. Ratings agency Moody has cut the credit ratings of 26 Italian banks, including Italy's largest lenders, UniCredit and Intesa Sanpaolo, maybe. Keep in mind the Greece scenario. They're keeping a lot of this. This is just the iceberg, really. I mean, once Italy goes, and of course the Spain bond auction that came out today sees a cost of borrowing rise. This is the tip of the iceberg, folks, and this is how it was all going to unravel. And going back to those, the last days of Bear Stearns and Lehman Brothers, etc., etc. If you read through those articles, you will start to see that these CEOs of these companies, they will stand there until the last possible second, saying everything's okay, don't worry, it's fine, and then they lock the doors and they turn the lights off and lock the doors. And finally, we have Chinese gold demand hits record high. Chinese gold demand hit a record in the first quarter of 2012, according to the World Gold Council, WGC. Chinese demand for jewellery and gold as an investment hit 255.2 tonnes in the period, helped by purchasing during the Chinese New Year holiday. Now, once again, China, Italy, etc., no matter what the price does, these people continue to buy because that is what they do. So I'm not particularly concerned about the knockdown. I mean, at some point there's going to have to be a dislocation from the paper and the physical price, and this could be the beginning of it. I don't know. Anyway, guys, linkies are down below, and watch yourself.